Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. We begin today with the much awaited Jackson Hole Symposium. Markets would be keenly listening to Powell's speech, based on which commentaries would be made whether what he said was hawkish or dovish. All these stories do impact us. If it's more hawkish, we might see dollar strengthening, while dovish comments might have the opposite effect. JK, good morning. What are your thoughts on what's to come in Powell's speech and what updates do you have for us?
Yeah, good morning. It's Friday, but it's going to be a lot of action, at least in the second half of the day. In the lead up to Jackson Hole Symposium speech from Powell, a lot of Fed speakers have been on the wires and sounding quite hawkish. But the hawkish commentary of these Fed speakers has been or will be of little consequence as market awaits Powell's keynote address at Jackson Hole. The only dovish element that is immediately up for debate is incremental policy change to Fed's coming meetings, particularly in September, whether it's going to be 50 or 75. That is the immediate thing that market will be trying to assess. And I don't think Powell is going to resolve that. Probably he's going to talk both ways, like inflation is still high and they will continue to fight. At the same time, economy is showing some signs of slowing in some sectors, barring the jobs market. So market is kind of prepared for hawkish tint in his talk. So such a statement will not probably lead to a big rally in the dollar, which has already rallied. But the dovish statement can actually see better or deeper retracement for the dollar. But let me tell you, it's not just the dollar; it's also the stocks and the bonds, which are actually been moving quite a bit. Yesterday, yields fell, and stocks also rallied. So that's an indication that probably how the market is positioned. As far as the dollar is concerned, the trend is still higher, but since it's been stalling at 109 levels for quite some time now, we should see more consolidation, probably a deeper retracement before the next rally takes place. But we had a lot to chew on the economic data yesterday. GDP for US came once again at minus 0.06%, the second estimate for the second quarter, on the heels of minus 0.9 last assessment, and the expectation was for minus 0.8. While this confirms that technically US is in a recession, the debate whether we should consider GDI or GDP, that's a gross domestic income or gross domestic product, is going on, because GDI is on the rise and the GDP is on the slower side. Theoretically, both should be in the same direction. Therefore, some people actually average them out, and the average gives us a positive number. But look at it from a slightly broader perspective. Economy is not slowing down so much as the GDP number indicates. And GDP number is subject to many volatile factors like inventories. A big drop in inventories for any reason due to supply constraint or anything will actually pull down the GDP. That's another thing. And also the trade data, which was highly negative for some time, has started to improve. So there's no clear-cut conclusion that the US economy is in a recession. Definitely, some sectors are still doing well. The jobs market is doing well, which is confirmed by yesterday's jobless claims data for the week ended 19th August also, where the claims actually fell 2,000, while the market was expecting it to rise. So it's still, safe to conclude that the US economy is still doing well, much better than others. But while I say so, European data, particularly from Germany yesterday, was also a positive surprise. And GDP number from Germany came on the positive side at 0.01, thus avoided a technical recession. So the pace of economic activity in Germany has definitely slowed down. but it's not contracted, like what is evidenced in the US GDP data. So, but at the same time, market will take that with slight caution, because the challenges for the Eurozone is still ongoing, particularly on the energy front, etc. Activity levels may be affected going forward. Lot of the GDP contribution has come from government spending also. So that's something to take note of. Another positive surprise was IFO data that came better than most expected. And that was again an indication that probably German economy is not doing as badly as was thought. The the leading indicator came at 88.5 in August from 88.7. So it is not such a big drop, but it's better than what was expected. Important thing is the slide has been slowing down. So that is how the market is interpreting. So I think European economy is on a watch, and if energy situation continues like this, and the natural gas prices continues at current levels, there's no way you can say that Europe is out of the woods. So that's what it is. And today's data points would be obviously the Michigan final reading on the sentiment and the inflation expectations, as well as the core PC price index. Then will be followed by Powell's speech at 7:30 p.m. IST. The dollar yesterday has been like a very rangy movement. Obviously, with so much on the plate going forward, no definite direction is emerging immediately. Yields also did not pull the dollar much lower yesterday. That shows how the market is waiting for the Powell speech. So euro tested a couple of times above 1.00 and came below it. The trend for the dollar, as I said earlier, is still upwards. On the rupee side, slight expansion of the range in the last 2 days. Downside, we have seen 79.73, and upside, we have seen 79.92. Yesterday was a day of demand, in contrast to the earlier day when there was some supplies. And yesterday, we heard about some stake sale by Sintel, and coverage due to outflows on account of that might have been a factor. And rupee was dealing from the overall dollar movement, and oil price going above 100 also affected the rupee. But today, all in all, I expect a slightly narrower price action all around, because market will not take much positions ahead of the Jackson Hole Powell speech. So have a good one, and let's see what is in store for us when we open on Monday. Thank you.
Thank you, JK. And that was insightful as usual. And as you said, we go into the weekend, market might not be positioning much before Powell's speech. So it's imperative to have a very good risk management practice, as it can turn volatile if, let's say, something adverse comes up in the speeches. That's it from us today. Have a very good weekend, everyone. We'll see you all on Monday. Thank you.